Hello, everyone. Happy Friday. How's everyone doing? Good morning, Sterling. Thank you for putting in all the earnings. Again, there wasn't much that's going to be market moving. We had Dell report yesterday, which missed on revenue. That's my big red flag. It's things miss on revenue. Good morning, Patrick. What else? Good morning, Bull Strike Cheetah. And thank you also for putting in the news. We have the core PCE. Well, we have all the PCE numbers coming out this morning, which we'll talk about in a second. The market got shellacked again yesterday. All the areas that have been dip bought turned into sellers yesterday because we broke through those areas. So still watching now. We'll go through that in a minute, but still watching for an end of week potential little mini bounce or at least some covering, but the market has to really prove itself. Good morning, Heinrich. Good morning, Daniel. How are you doing today? You think the recession's coming soon? We will see. Hello, Charles. What was Tim Ross? I did not see what he said yet. I started the live stream. It must have come out after that. The 3-month annualized rate held steady at 2.4, and the 6-month annualized rate was also 2.6. Again, inflation is sticky. This is sticky. It's stalled out for a bit. Yes, we give a big shout out to Sterling. Thank you, Sterling, for all that you do. All right. In case you don't know it, Friday, my least favorite trading day of the week. But more important, core PCE month over month coming in at 0.3. Personal income, big jump in that 0.9. Personal spending drops after the holidays. Remember, this is mostly due to holidays, not anything else, because people overspend during the holidays, and then the bills start coming due, and they're like, uh-oh. The good news is personal income is going up, but that can lead to, again, upward pressure on inflation. PCE price month over month, the headline number 0.3, year over year is 2.5. Retail inventories are up from prior. Wholesale inventories are up from prior. Those are the advanced numbers. And the year over year core PCE dropping from prior 2.9 to 2.6, but that's what is expected. So, again, from prior, you have some slightly better readings. A lot of that was due, to the weighting of healthcare, though, versus CPI. And interesting, I think there's a little thing out recently. Hold on, I'm looking at my other monitor. U.S. consumer spending on healthcare and government expenditures accounted for over 50% of the U.S. GDP in Q3 of 2024. Consumer spending on healthcare services alone accounted for 25% of GDP growth in Q3 of 2024. And they actually have modeled that healthcare costs are coming down, which I don't see at all. But those are what the numbers say, so whatever. Not with 4% unemployment, there won't be I'm not buying a lot of these figures, though. I'm not buying them. But we'll see. Again, we don't trade what the market's or what we think is going to happen. We trade what the patterns say. So, market this morning, let me just refresh this once more. We have sort of a mixed basket. Palantir continuing its pullback. Some things that got hammered yesterday are getting a slight bounce, except for Tesla. But I think there's a lot of covering today. The financials holding in there and consumer defensive holding in there. If we look here, consumer defensive and financial are leading the market. Technology is continuing its slight pullback. Fed Watch still has the first cut in June and then another quick cut followed up in September. So the market's still pricing in now back to 2 cuts this year. We are still in extreme fear mode, which is where we start watching for a bounce. PE ratio finally back below 37, but nowhere dirt cheap. We Sterling already put in all the earnings. If you are interested, just scroll back through the chat. Good morning, Royal Palms. So, all right, S&P. We had the buying pressure we had for multiple days, and then we just sliced through it yesterday, right in the area of the 200 and the 87.5 harmonic, and some very key support. With very oversold conditions and cycles at the bottom, would not be surprised to see some kind of bounce If it doesn't happen today, maybe early next week. I'm watching for some kind of reaction now to the upside, but daily mode is in bearish mode, and weekly mode, if it closes here, is in neutral mode. Remember, maybe not today, it hasn't even been confirmed yet, but we still have a potential double top in play on a close below, a weekly close below 58.09. So we're going to keep an eye on that. Is there any other minor bullish pattern not yet headed in the open? I'm paying attention to the 4-hour rotation zones. I'm paying attention to 59.15. If we did get a stronger rally back through that, the next major level is 59.50 with a minor level coming in about 59.26. To the downside, I'm at 58.53. And again, if we rolled over in the open and came back down, tested that the 87.5 harmonic, we could set up for a little mini double. So I'll be watching if we get a stronger bullish pattern, but right now there isn't one just yet. We have a little flagging pattern here, just a little rebounding flagging pattern. I'm going to be watching for a stronger bottoming pattern. The NASDAQ. Now, technically, this is not a valid double because this spiked down. If that spike down didn't happen, which was immediately recovered, I have the targets back on here because I'm curious. I'm just curious because of this one candle invalidated, but I was just curious where this would lead us. If it does close below 20,694, I'm just curious to where those things are. My first target would actually be 19.6, the 19.6 area, separate from the double. But the double first target is, or second target is just below that. So I'm just going to leave this on here and see how this plays out. Now, it's not going to fall out of bed unless something major happens in the world. And it hasn't even triggered yet on a weekly basis. And more importantly, even if it closes below this low of 20,694, even though it's not technically a double, it is confirming at least some kind of short-term top. Now, back to the weekly. We are in neutral mode, and hooking over could be turning the bearish mode on the NASDAQ soon, but the weekly mode is neutral, and the daily mode is bearish. Let me get to the daily mode. The daily mode is bearish. You see the first cross, the rotation zone. That does not mean we trade crosses. Now, what this means for me is neutral on the weekly, bearish on the daily. I'll be watching and more aggressively watching for rollover and bearish setup patterns on the daily and the shorter term. I will be less aggressive, and I'll take in for any bullish patterns. My targets get tighter and my stops get tighter because we have downward pressure. And for rollover patterns, I use wider targets and normal volatility stops. So the key levels to the upside, you're still going to see around 20,740, 20,750, and then there isn't much until 20,900 is the next key level if we get a stronger rally. Same thing here. There's just a sideways channeling pattern. We'll be watching for more if we break above 20,675. We'll be watching for the stronger rally, and then I'm paying attention to the 4-hour rotation zone as the first key little reaction area. If we don't get the rally today, I'll be watching to see if we set up a % buy for Sunday night / Monday. That goes true in anything. If we don't stage a rally today, I'm going to be watching for % buys in the S&P and the NASDAQ going in Sunday night / Monday, which means I'll be watching the highs from today. It all depends how this is going to close, and I don't know how that's going to react yet. But that's exactly what I'm watching for. The Dow yesterday, or overnight, coming down to the 62.5. The Dow also in bearish mode on the daily. And the Dow, so far, we don't have the weekly close in, but it looks like it could possibly be neutral mode on the weekly. Trading against 43,480. The next key level up, if we do sustain more of a rally, is 43,725. If onto the downside, on a close below 43,190, I'm really shifting my focus then to the bigger targets of the 200 and possibly the 87.5 harmonic. Okay, and by the way, on the weekly, we still have a potential double top on the Dow also, but nowhere near triggering. Russell finished. It took a while, but look at that. By the way, the little mini double bottom never triggered or confirmed, and yesterday's price action took that off the table. But look how long we had to wait for this. This is why timing, this was triggered back on the week of the middle of December, and it took till the end of February, and it played out. Trading right at the final target. It's probably not going to end up there today, but trading right at the final target. So that is now completed. All right. And the Russell trading back to levels in the big August sell-off, the retest in September, and even May. Look at the Russell. If you go all the way back to last December, we're technically trading below some of the levels of last December. So the Russell's gone. Unless you took profits along the way, it's gone a whole bunch of nowhere. A whole bunch of nowhere in over a year. Key resistance 2152, and then we're looking at right around 2200. The next level, should we break down, you have very, very key support about 2112. 2112, right around this area. VIX, again, slightly elevated with yesterday's price action, and actually the highest VIX close since we had the spike in the middle of December. This is the highest VIX close. So in order for me to get really more sustained besides a bounce play, we have to start getting back below 20 at first. And we're trading 21 right now. The DAX still holding the bottom of rotation zone, still trying to hang in there. We got the potential double top. To return us somewhere in the weekly rotation zone, so still watching for a close below 22,171. Let's see who else we have. Jacob, good morning. McRangers, good morning. There's a trigger. I did not look at, because I'm looking last at the Russell. You mean this little one? Technically, yeah, we're against all these things. Yep, I'm looking last at the Russell for my bull case. You still have that in there. Why last for the Russell? Because the Russell is against the 1 hour rotation zone, the 4 hour rotation zone, the daily rotation zone. So this, I'd be looking first for, again, I rank the top four. First thing I'm looking for any bounce patterns is the S&P. Why? Because it's technically held up. The S&P and the Dow are the two I'm watching first, and then the NASDAQ, and then the Russell. That does not mean you can't get the rip your face off rallies in the NASDAQ and the Russell, but those aren't the first ones I'm looking at. The notes, still climbing. The high of 111.02, 111.02 and a half. I'm saying that's virtually hit the 87.5 rule. So going to be watching forward to see if we set up a topping pattern next week and a potential bottoming pattern in the yields, but there's nothing yet. Besides, we got some divergences. We got a stair-step divergence down here. So you see 3 pushes lower, 3 pushes higher in the RSI, so this is definitely waning momentum. Going to be watching for a setup potentially on even Monday if we set up a percent, or Sunday night for a percent B buy bounce. What else? Dollar index. Nice little rally yesterday off of more tariff talk. Coming back into the key breakdown level. So we are getting cycles back to the top, but now it would just be trailing. We had a percent B buy that followed through with the close yesterday. So, and now it's hit a major target area, so it would definitely be an area for me to definitely raise stops aggressively from any long trades, because this was for a bounce play only, not a long-term bottom yet. Crude, nothing really. No great patterns there. I tried to move this line back to the breakdown zone, which we closed at yesterday. I'm going to be watching to see if this pulls back and makes a potential double bottom. Other than that, there's no fantastic patterns, and we have not closed below 62.5 yet. Gold, Yesterday closing right at technically below the bottom of the rotation zone and following through today. So we're entering the area of the weekly rotation zone. So going in next week, I'll be looking for a potential bounce play. Is there one yet? No. But if we continue the pullback, the 50 EMA in the prior major breakout area is a very key support area. About 28.30 to about 28.40. What else? What else? What else? What else? The yen. We're finally getting the bounce play in that out of oversold conditions with some divergences. This is so far just a bounce play only, going into very key resistance and into the daily rotation zone. So now, again, I sound like a broken record, but I'm going to be watching for the next pullback play to see if we establish a longer-term bottoming pattern in the good old yenster, because this is a very key support area. We flip around the harmonics. So the breakdown zone, the target area in the short term, 151.20 to about 151.35. What else? What else? What else? We have not looked at the euro recently, but the euro has never been able to confirm or trigger the potential double bottom. So we have to do our count off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Guess what? It's no longer valid. So it's no longer valid. So that potential double, which was never confirmed or triggered, is off the table in the euro, which is another reason now I'll be watching for the pullback in the dollar index to see if we hold these recent lows and see if we can get a stage of stronger recovery. What else? Bitcoin. Bitcoin, by the way, the little mini double bottom, invalidated before it ever triggered. Bitcoin finally got back with its 200. Now Bitcoin, unless it stages a massive rally today, will have triggered the double top and hit the first target, by the way. So I will be watching bounce patterns, especially bouncing back to, the 80 or the 90K level. We'll be watching for rollovers. We are very oversold. I would not be aggressively shorting this down here. From my perspective, cycles at the bottom, very oversold. So that's where that sits. But we could definitely see some further pullback. And by the way, the thing that still does, this thing would have to get back above 97,800 before it would invalidate this pattern. Where else? Strategy, MicroStrategy also testing its 200 area and continuing to break down. This is going to get interesting, but the Sailor's cost basis is still well below where Bitcoin's trading, so they're not in trouble yet. But if Bitcoin really pulls back, it could get interesting for MicroStrategy. Let's take a look at the spiders and the Qs. The spiders definitely closing also below the 62.5 yesterday and ticking off that 75 harmonic. So same thing, bearish mode on the daily. Neutral mode, we don't know where this is going to close, but so far it's a neutral mode on the weekly. So on any gap plays, or I'll be watching for rollover plays again. Not yet. Not yet because we're oversold. But your minor targets are 589.50 and then 594.30. Those are your key targets. Now, if we roll over, we'll be watching for the gap fill to 585.05. And we'll have to see if it forms a stronger pattern in that area. The next key level, the next magnet price, though, is back at 580.09. The Qs, back testing the lows from mid-January. The Qs not yet at it. They're 200, but going to flip this around right now. So the Qs got shellacked yesterday. Completely shellacked. Key targets, I'm using the harmonics to the upside. 505.34 on a rally, and then 510.41. Again, bearish mode on the daily, neutral mode on the weekly, unless we stage a massive rally today. Oops, what did I do? There we go. Still expecting the Qs to regain the 200 on the Qs also. The Qs to regain the 200 on the Qs. The Qs to get to the 200 over the next few weeks. Other key things, Tesla also hitting its 200. It's going to gap down below the 200 today. Remember, now this is very oversold with cycles at the bottom, so I'll be watching for this for rallies. But any rallies we'll be watching for rollover plays also. But we did tick off the 200. The next key level on a closing basis is 269 area. We close below that. We could round trip this back to the upper 100s. But before then, there's still a gap left behind from election when Elon got to be Trump's right-hand person. So, again, definitely wouldn't any dips could be short-lived in there. NVIDIA, with the price action yesterday, breaking some short-term key support and still some selling pressure in this. And we're back to losing the major support zone which it regained. So, would not be aggressively buying NVIDIA at this point. If we really start breaking down again below about 118, going to be watching for the bigger pullback there. Broadcom coming back down to the lows at the end of January. Going to be watching for Broadcom to break down and retest its 200. Lots of key things are broke. Amazon didn't quite get back to a potential double bottom. I am watching for that, but the only thing that would make me bullish, because look at this price action yesterday with Amazon. That's not bullish price action after returning and gapping up to the breakdown zone, getting hammered. Going to be watching for Amazon to at least return to this 198 level. Google's also lost its 200. Does that mean we can't get bounce plays? And closing below the 62.5. We can easily get bounce plays in these, but Google's now magnet prices back to about 155, which is a low area from September. The first key next price is 162. So on any plays, I'm going to be watching for this to kiss the 200 goodbye and kiss the rotation zone goodbye on any bounce plays. Just running into some key things. I mean, a lot of stuff is not looking. We're going to be interesting on the next bounces, but look at Microsoft. Microsoft, look at this strong support base. We got below it on Tuesday. Look, we gapped up yesterday, rallied, and then slammed into it with the look at that reversal candle after reconfirming. Here's the levels. See this? See, this is the prior major support base, and we slammed back into it with a declining rotation zone. So a lot of these mega caps have some heavy lifting to do to regain their support zone. Now, the real interesting level on Microsoft is 388. You lose that one, could get interesting over the next few months. So, sometimes even if you're not trading these things, it's helpful to go through. Meta, bearish reversal candle yesterday. Now still holding the 50, but if Meta starts losing, especially Tuesday's lows, watch out. Tuesday's lows, watch out. We could easily, over the next few weeks to couple months, have Meta return or let the 200 still grind higher and let Meta keep dropping into some support levels. What? DTM. DTM. Beautiful triggered head and shoulders. Yeah, it does have a triggered head and shoulders. It's not. Back to that double discussion. Why is it not a double? Because you see the head exceeded the 25% harmonic by just a bit. So it cannot be a double. But you have a very nice shoulder, head, shoulder right there. So good eyes, Sterling. This is not one that I look at regularly, but it is completely valid. And would not ignore the first target area. So this would be one that on bounce plays, I'd be watching for rollovers, and my first target area would be very key at 86, because that's also reinforced by the 200. And look at the last time. This hasn't touched the 200 since February 24. All right. So bounce plays, I'd be looking for rollovers. All right. With that, let's peek at the open. Let's just peek at the open. So you had the little rally, the little bounce off of the print, off of the PCE print, slamming into key resistance where it topped out prior, and now breaking this key support into the open. So there's still selling pressure coming into the open. That's why I wait for, if you're going to try to be bullish, wait for some setups. Not a strong tick opening. Not a strong tick opening. So, here we go. If we pull back, this is where I'll be watching to see if we can hold maybe a potential double bottom. Maybe we can get a double bottom and then a reversal either today or Sunday. And we also have the potential percent B, a potential percent B if it holds throughout today. So the key levels to take it into potential double bottom is 58.69 or below. All right. With that, I hope everyone has a fantastic, fantastic trading day. Remember, don't be silly or stupid on a Friday. There's been a lot of downward pressure. There might be some from any shorts. There might be some short covering going into the close for people not wanting to hold this over the weekend, and short-term algos will be flattening out. So don't be surprised if we get that towards the end of the day. With that, I shall talk to everyone on Monday. Hopefully everyone has a wonderful, wonderful weekend. Thank you for tuning in. Bye for now.